Alright, hello then everyone, as we are at the end of another week of trading on Friday the 1st of December, into the final month of the year, into December, Christmas time in a couple of weeks, and then into 2024. So let's see how we can round the year off on, pretty strong month of November. Across stock indexes, the S&P finishing close to double digits up, the Dow Jones rallying into yesterday and over the course of this week. Aggressive upside across the board in stocks. Don't know why I'm naming those two, but stock index across the board having their strongest month since the vaccine-driven headlines of the back end of 2020. But we'll worry about this week. I've obviously broken down recent weeks in obviously recent videos. Economic calendar hasn't really impacted markets too much over the course of this week. What has impacted markets over the course of this week is we had comments from a member of the Fed, Christopher Waller, on Tuesday, suggesting that talking about the prospect of interest rate cuts from the Fed next year. So the fact that he even mentioned the word interest rate cuts did spark markets to continue to price in the prospect of interest rate cuts heading into next year, potentially even a 50% chance of cuts to the cuts to the interest rate in the US in maybe potentially as early as March next year. So 50% chance of a cut in March of next year, which I personally don't really get behind. I'm not sure. It's probably a bit earlier, maybe mid to kind of second half of the year, probably next year. You'd have to imagine. We've got Jerome Powell out at 4:00 today. I'm gonna put my money on him pushing back on those comments from earlier on in the week. I think he's probably gonna rule out an interest rate cut in Q1 of 2024, possibly even rule it out of Q2 of 2024. Maybe leave the door open in Q2, but I certainly think he rules out the prospect of interest rate cuts in Q1 of next year. If he does not, if he says there's a possibility of a cut in Q1 of next year, now expect stocks to continue their upside and expect the dollar to continue the downside. But a bit of a pullback today post Jerome Powell would absolutely not surprise me whatsoever. But apart from that, your economic calendar has not really had much of an impact. I mean, inflation continues to come down in Germany, which did cause the euro to sell off slightly. Comes down in France, comes down in Europe, comes down in Italy. So inflation across the board throughout the eurozone comes down. GDP minus 0.3% in Canada over the over the third quarter, should I say. So now a bit of Canadian dollar weakness off the back of that, but again, it's a backwards looking indicator. It's not a forwards looking indicator, so we're not too fussed about that, as it is a number of months back at this stage. This is obviously Q4. December, November, October are Q4, so you're looking at September, August and July, should I say. So September, August and July, it's obviously a pretty far looking back indicator, isn't it? So yeah, maybe Canada to enter a recession start of next year, but we'll keep an eye on that. PCE was the big hitter of this week. Markets were eagerly anticipating for this inflation print to give us clues one way or the other as to where the Fed would position themselves going forward in terms of their stance on monetary policy. But consensus 0.2, actual 0.2. Consensus 0.2 across the three of these figures. Personal income, personal spending, just bang in line with expectation. It's slowing from previous month, 0.3 in the previous month, 0.2 in the month of October. Does that really give us much information either way? No, bang in line with expectation, which is why we've seen a bit of chop across a number of different asset classes post-inflation print of yesterday. But the driving force of markets this week were those comments from Fed's Waller, which did cause a bit of downside to begin with in the US dollar. You can see Tuesday's print. I'd say Tuesday's price action, should I say, popped higher on the Aussie, popped higher on the Euro, popped higher on Kiwi, popped higher on cable. Just sent dollar Swiss down to begin with, sent dollar yen down, sent dollar CAD down, sent the dollar index down. But you have had a bit of a bounce back since then, and markets have just kind of chopped sideways. But that's just a natural pullback as we head into the as we head towards the weekend and also into month end. So kind of Wednesday, Thursday were a bit choppy, a bit of a pullback. Probably people taking some profits on some profitable positions over the month of October. Equities, the S&P 500 has had a pretty choppy week. Popped higher off the back of those comments on popped higher off the back of those comments from Waller on Tuesday, but since then it's just chopped sideways. The Dow Jones has been ripping higher though, which may be a bit surprising given the fact that the S&P, the Nasdaq and the Russell were all sideways over the course of this week. Obviously mega cap stocks enjoying themselves at the moment. The DAX and the Euro stocks are relentless. They continue to push higher. The DAX probably pushing higher due to the fact that the ECB one has lower interest rates than its counterparts in the UK and the US. Now, this is something we've talked about for a while on a lot of these videos, is the fact that interest rates are lower in Europe than they are across most of the other G8, most of the rest of the G8. Plus, they're probably closer to an interest rate cut than the rest of the G8. So that's what European stocks, as I said, was probably an attractive proposition, and that has proved fruitful. That has continued to rally aggressively to the upside in the form of the DAX and the Euro stocks. The FTSE's just been doing nothing for. It's been chopping sideways. Stick that in a daily time frame. It's really been chopping sideways for pretty much the whole of 2023 and the whole of 2022, so it's really gone nowhere in the space of nearly 2 years now at this point. Obviously you get some ranges, but you can look at that. I mean, you buy the lows, sell the highs. That's really the only profitable strategy on the FTSE at the moment. Bit more of a directional bias across the rest of stock indexes. Yields lower, 10-year, 2-year yields lower, aggressively lower to begin the week off the back of those comments. They have somewhat stabilized into Wednesday, Thursday, Friday, and they're just kind of hanging out here at the lows. But if they were to continue lower again, that is negative for US dollars, positive for stocks. But yeah, I'd back them to move higher into the close today, giving back some of these losses from earlier on in the week. Plus, I'd imagine Jerome Powell at least tries to talk a good game. Whether that gets sold back into, whether those rallies get sold back into, or rally in the US dollar, sell off and stocks get bought and sold back into is another question. But I have to imagine, yeah, I mean, if you're a betting man, which we are in this game, you'd have to bet that he does at least push back on some of the comments from earlier on in the week. Gold continues its move higher in line with that move lower in yields, but again, yields move higher, gold should move lower if I am proven correct into the close today. You can see oil relatively choppy. OPEC pushing back their meeting. Haven't got one push back their meeting yesterday. Haven't got really one clear cut answer one way or the other. We're expecting cuts to go forward, but they are voluntary cuts, right? Whether those cuts actually go through is another question. They couldn't come to an agreement with the African nations about a standard cut for everyone. Congo, Angola and Nigeria wanted to increase production. Saudi Arabia and Russia happy to continue with their production cuts and cut further. Some countries want to, some countries don't. So a bit of a disappointment from OPEC. We thought we were going to get a bit more of a kind of universal cut to production. Not really what we got, should I say. So I think markets, probably hoping for something a bit more clear cut from OPEC, and we'll have to see, do those voluntary cuts come in over the next week or two. But apart from that, that's really how markets have moved over the course of this week. Stocks higher, dollar, probably closes pretty similar to where it opened. Yeah, you can see where it's at. So it's probably, if proven correct, that's probably going to close higher today. But lower to start the week. We got it right to start the week. Second half of the week been pretty choppy and had a bit of a pullback. So, yeah, it's pretty similar theme. Dollar lower, stocks higher. That is probably how it is likely to continue going forward, bar any sort of major shift in stance from Jerome Powell later on. But anyways, I'm going to wrap it up there. Have a good weekend. Do recharge the batteries, and we'll be back next week for another week of trading. Thank you.